Okay, so now let's talk about CVP analysis with respect to multiple products. As I said, there are some more assumptions that we need to add if a company is producing and selling multiple products, let's say 2 products. Okay, so here we have to make more assumption about the production and sales. One of them is that production and sales will take place in a constant mix or ratio. That is, if a company has 2 products, product A and product B, so production and sales will take place in a constant ratio of, let's say, 2:1, which means whenever we will produce and sell 2 units of product A, at the same time we will produce and sell 1 unit of product B. Or the other possibility is that we make an assumption that we will sell the products in order of the ranking the CS ratio. So the product that has higher CS ratio, a higher contribution in terms of sales, that product we will produce and sell first, and then we will produce and sell the second product. What it would help us? It would help us to achieve our break-even point by selling lesser number of units in a quicker span of time. But practically both these assumptions and actually it may not hold true, because actually you know sell as per the demand. But in analysis and in planning stage, we will make this assumption that the production and sales will either take place in a constant mix or in a ranking of CS ratio. So what we have discussed earlier, the same 3 analyses we will now discuss. First of all, let's talk about the break-even analysis. Here break-even will be calculated in terms of mixes, because we are assuming that production will take place and sale will take place in a constant mix. So initially we will do a calculation of break-even point in terms of mixes, which could then be converted into units of each product, right? So the formula which we earlier discussed was fixed cost in total divided by, earlier we discussed it is contribution per unit, here it will be contribution per mix. In one mix, as I used the example earlier, let's say if the ratio is 2:1, so it means in one mix we are effectively producing and selling 3 units, 2 units of product A and 1 unit of product B, in total 3 units. So here effectively what I want is the contribution of those 3 units that are part of one mix. So let's say a company having 2 products A and B, each with the respective selling price and contribution. So let's say this one I will use the same as before, and for this one let's say we have this much amount of selling price and variable cost, which gives us a contribution of 2. Now the same ratio which I have discussed earlier, let's say the ratio is 2:1. So in one mix we have 2 units of product A and 1 unit of product B. So if I want to calculate the contribution per mix for 3 units, I will consider the contribution of 2 units of product A and 1 unit of product B. So effectively 6 plus 2, we have a contribution per mix of $8. So whatever amount of fixed cost you have in total divided by 8, so you will be able to get your number of mixes that you need to sell. So let's say our total fixed cost, let's assume, is 80,000 and we have a contribution per mix of $8. It means that we will end up having a requirement to produce and sell 10,000 mixes. 10,000 mixes means 20,000 units of product A and 10,000 units of product B. So if you want to do a further analysis in this one, how many units of each product, you can consider the ratio and you can even determine the number of units of product A and B that you could separately produce and sell. So this is when you want to determine the break-even point in terms of units. So what if we have to calculate the break-even for multiple products in terms of amount or dollar? Then how we can do our calculation? Then as we discussed earlier, in break-even point we said fixed cost divided by CS ratio, but here because multiple products are involved, so if you are assuming a constant mix, then you have to take the weighted average CS ratio and divide it by the fixed cost. What is weighted average CS ratio? It reflects both products. So if you want to calculate weighted average CS ratio, contribution to sales ratio, you can take the total contribution of both products and total sales of both products and divide, you will get the weighted average CS ratio. Or if total numbers are not available and per unit data is available, then you can take the contribution per mix and selling price per mix. Again, you can calculate the weighted average CS ratio. If we go back to the same example which we were discussing previously, we have already calculated the contribution per mix to be 8. Same way you can calculate the sales per mix, selling price per mix, because selling price of each product is 10 and 5 and the ratio is 2:1. So 10 times 2 for the A and 5 times 1 for B. So we will be able to have a selling price or sales per mix of $25. This will give you a weighted average CS ratio, which when divided with the fixed cost, you can calculate the break even in terms of dollar. So if we add on to the same example where we have a fixed cost of 80,000 and then we divide it with this ratio, we will be able to get break even point. And this break even point, if you want to further associate with product A and B, the total amount of break even here, you can do 2/3 of it will be assumed to be generated by product A and 1/3 will be assumed to be generated by product B. If you want to specifically highlight for each product, it will tell you how much amount of revenue you need to generate to be able to recover your cost with respect to two products. This is when you have constant mix assumption. If you have a assumption of highest ranking CS ratio or priority, first we will make this product and then the second one, then you can simply take the fixed cost and divide with the CS ratio of the highest ranked product. You will be able to determine the break even point. The same analysis you can then apply on the target profit analysis as well, which we were discussing earlier. So for target profit analysis, it will be fixed cost plus target profit, both of them in total, and then dividing it with depends on what you want to calculate. If you want to calculate in terms of mixes, then you will take the contribution per mix, and if you want to calculate in terms of amount, then you will divide the whole same thing with weighted average CS ratio. So this way you will be able to determine how many units or amount of revenue need to be generated for us to be able to achieve a target profit. And if you want to do the margin of safety, you can take the budgeted sales in total for all the products and break even sales of all the products. It will give you an overall margin of safety with respect to all the products. Next, moving forward, we will be discussing graphs and charts. We will be discussing profit volume chart, contribution break even chart and break even chart. This is also part of our syllabus, and this is what we will be discussing.